It shouldn't be super controversial to say right now where we are in the market, there's a little bit of uneasiness. And when there's uneasiness, a lot of people are going to look towards stocks like REITs for some stability. And the reason this is the case is because they give a nice high dividend yield. You can park it in here, you can ride out the down period. A lot of the S&P 500 might be going flat, might be going down if we're in a rocky economy, and you're going to be getting a nice solid REIT. A nice solid yield from a REIT like this. Realty Income is a stock I like in general. I like diversification into REITs. This is one of my top three. It's probably VCHEAP, and then of course Realty Income is up there as well. So this stock has performed pretty well. I mean, over the last 5 years, it's down slightly from where it was 5 years ago, and obviously from highs in 2022, you're down quite substantially, but it's not because they've performed poorly. And if we zoom out, I mean, we look at let's say 2015, middle 2015, about 10 years ago, you're still up on the share price plus all the dividend yields you got in that time frame. So this is a stock that has historically performed very well. Like I said at the beginning of this video, we clearly see a lot of uncertainty in the market right now. And we can see that reflected inversely in Realty Income. We're up 4%, while the S&P 500 has tanked, 10-ish%? Almost exactly over the last month. So this has performed substantially better, right? It's only up 4%, which isn't a crazy amount in itself, but when you compare it to the S&P 500, which has been doing not well, people are putting their money here. This tells me not only that, okay, this is a stock that people go to in this specific worry, a bear market worry, but also people don't necessarily expect the rates to increase, at least not dramatically, because if you were to expect rates to just increase dramatically, there's not really much reason to invest in. The 5.6% is good, but you could just throw it into a CD yielding around this percentage and you wouldn't have the risk of something really weird happening with the company. You could just park it in an FDIC insured CD and not worry about it at all. So at least right now the market isn't super bought into the idea of rates going up, which does matter when you're investing stocks like this, because it's true. If I could just throw this money in a CD, why would I buy something like Realty Income other than, okay, it's a good company and I like diversification into REITs. But I don't think we're going to see rates crazy high. I could be wrong on that. I do not know. They might increase marginally. We don't really know at this point, but at least the market isn't betting that. So when I'm looking for a dividend-centric stock, a dividend I'm mainly investing in to get its dividend, I'm looking for three things. Let's go through them one by one and see how this stock shapes up. So first thing is, how long has it been around? Which way does the share price move? Because you see some high dividend yield stocks that, it's got a great dividend yield, but it's going down or it's been flat. And flat is okay. It's not as good as up. If we zoom out on Realty Income, it looks rather good. We've been around since the early 90s. Of course, the yields has fluctuated dramatically, but this is a company that has been around and been successful, consistently going up in share price since the early 90s. So you got to check there. Two is the dividend yield. The dividend yield is in the mid fives. That is good, but it's not also too good to be true good. We're not looking at 14%, which is can't really do that. Not consistently, and most companies certainly cannot. So it's actually kind of in that healthy range, in my opinion, of, okay, this is really solid, but also not too good to be true solid. And then lastly, I'm looking at what industry is it in. I want diversification. I want diversification into REITs. I want diversification into utility companies, that sort of thing. Certainly what I'm looking for, dividends and looking for diversification when there's a bear market. Because like I said, Realty Income is going to do just fine during a bear market. So I love tech. I cover tech all the time on this channel, but it's very important. So I like REITs. REITs are good. REITs are fine. I don't have too much of them in my portfolio. So Realty Income is a stock that I would like to add, certainly if I'm looking for a dividend-centric stock. One thing that I'm also seeing when looking at this chart is it's clear to me we aren't necessarily near the top. And we can see, in 2022 when the market really wasn't doing that well, right? We were hitting highs in 2021. It was doing pretty good. But even we saw a lot of companies hitting lows in mid-2022. This stock was doing particularly well. Obviously, they had a pretty big fall off towards the end. But this is a stock that's going to hold up well during a bear market. And because we've seen these highs in the past, and this is a good solid company, of course, just because a stock has hit a certain share doesn't necessarily mean, it can hit it again. But if you're looking at a good company that's consistent, you can hit those prices again. And although people are starting to price in, they're starting to maybe move some assets towards these value stocks, it's not hitting its full peak. Clearly, yeah, we've rebounded a little bit if we're looking at the last year when we were at lows in the 50s. Okay, we're in the high 50s. right? But it's not like we're hitting crazy highs. We were at 62 a while ago. We were hitting highs in the 70s in middle 2022. This is a stock. It's not like everyone's piling into it. It's crazy high either. So I like Realty Income. I think they're going to do well. If you're looking for that dividend yield, if you're looking for diversification, if you're worried about a bear market, for sure, park money in this. This is going to be better than many, many, many other dividend stocks, in my opinion. Of course, not financial advice. I hope all of you are doing well and not freaking out too much about the market. We had a decent day on Friday, but try not to get too caught up in the day to day. Certainly for companies you really believe in and are investing long term and that sort of thing. I appreciate all of you for watching. I'll catch you next time.